Nigeria's year-on-year inflation climbed to 15.7% in February compared to 15.6% in January. Let's take a look at those numbers right now, starting with year-on-year inflation. There we are. Headline 15.7 was 15.6 in January. Food inflation is interesting. It decelerated 17.1% from 17.13. Core inflation, 14.01. Well, but pretty much everything else rose. 14.01, 13.7. Urban inflation also up. Rural inflation also up as well. Let's take a look at month-on-month figures. Every category was up. Headline, 1.63 from 1.4 in January. Food inflation, 1.87, which again, kind of curious. On a month-on-month basis, food inflation is up, but year-on-year was down. We're at the decelerated. Core inflation, 1.3. Urban, rural, all up. So let's talk about this with Ibukun Omoyeni, who's an economist with Vetiva Capital Management Ltd. Ibukun, good afternoon. Thank you so much for joining us. Any surprise with these latest inflation figures, considering all that's happened in February?
Good afternoon, Rotus. Looking at the inflation figures, we would say it wasn't much of a surprise, and that's because we are aware that the off-spec fuel imports has actually created a lot of fuel scarcity in Nigeria. And of course, that should actually affect the headline inflation. But what we actually knew was that we have a high base. And because of that high base, you will not see a significant impact on headline inflation. And of course, that's what we saw in the data. We saw that food inflation declined slightly, while core inflation rose significantly. Core inflation is currently at a 5-year high, and that's essentially because of the shock from the energy segment as well as a weaker naira. So looking at these two factors, we think it was well anticipated.
Thank you so much, Ibukun. Help us out with food inflation here. Decelerated in February. I know just two basis points, but I mean, month on month was up, but year on year, we're seeing food inflation. Yeah, what's the idea here? What happened?
If we cast our back to February 2020, if we cast our minds back to February 2021, that was when inflation was about to peak in March. So when you have food inflation as high as 21% in February 2021, and we are seeing inflation currently at 17%, there's still a high base that is pulling inflation downwards. So what that means in lay terms is that even though food prices are rising, because last year we saw a greater shock. Rather, we saw a greater shock here. That we still have the pressures, but that shock is making us see a less subdued impact on the inflation figure. So food inflation was expected to actually drop, but the shock from the from the first scarcity actually reduced the pace of decline in food inflation to 17.11%. And we believe that food inflation will continue to be sticky, considering the fact that we are seeing these pressures rise. We also note that we've not even seen the impact of the Ukraine-Russia tensions yet, because that tension escalated around the last week of February. So in the month of March, we're going to see a lot of, we may see further surprises in food and headline inflation, as there might be further upticks in both indexes.
Great stuff. What does this mean? So let's talk about, I guess, the average Nigerian in terms of disposable income. Doesn't sound good.
Definitely, right. An inflation figure of about 16% approximately. It means that the prices of goods double every 5 years. And what that means is that wages there will be a decline in purchasing power, and there will be increased clamor for higher wages. Of course, the CBN also alludes to the fact that an inflation figure above 12% is actually harmful to economic growth. So you expect that consumers will continue to bite under these harsh circumstances. So manufacturers and other producers would have to accommodate low-income earners in their plants. And of course, manufacturers are also faced with higher diesel costs, considering the fact that diesel is used in manufacturing. Diesel is also deregulated, and what you would expect to see is higher food prices. Another factor worthy of mention here is the excise duty on non-alcoholic drinks, right? Even though we had that excise duty, manufacturers are struggling to pass this even on to customers. And definitely, when the federal government announced that excise duty, give them the opportunity to pass on some costs to consumers. But definitely, with diesel prices at the level they are, we are expecting to see further increase in the price of other commodities. Looking at bread, for example, bread is made from flour made from wheat, and Ukraine is one of our top import partners. Looking at the recent trade data that was just released today, and what that means is that there could be more inflationary pressures in the future. However, you will need to observe the month-on-month food inflation to capture how exactly consumers are faring with respect to inflation.
Thanks for that, Ibukun. Yeah, Dr. Muda Yusuf was on he's head of the Center for the Promotion of Private Enterprise. I think he was on the morning show yesterday saying the federal government should suspend those excise duties because of its impact. And scary to think that, I guess, with the Russia-Ukraine escalation taking place, I guess, latter part of February, in fact, more in March, that these numbers could actually increase. What about investment returns, the real rates of return? How does one, in the face of double-digit inflation, what does that mean for investment returns?
Of course, looking at inflation, whenever there is a high inflationary environment, right, it is bad to keep cash because that cash will keep losing value. So it's better to put that money to use in assets, right? And looking at the treasury bills, that's the fixed income segment, we see that from treasury bills to even long-dated bonds, the yields are below 15%, and you have an inflation rate of 17%. That shows that fixed income earners are worse off. I'm looking at the equities market. We have a year-to-date return of 11%, except you were heavily exposed to the oil and gas sector, which is about 30% up year-to-date. That is when you actually be smiling to the bank. But for every other investor who has other asset classes, would actually be in the red. And of course, this is where diversification comes in. A little exposure to commodities, a little exposure to dollar-denominated assets. I also want to mention the issues of gold. Investing in gold would also be a positive move, considering the heightened geopolitical tensions. Even on the Nigerian Stock Exchange, we have the new gold ETF, which actually tracks the price of gold. So investors that want to diversify could look at these other asset classes in order to dollar cost average and find a way of achieving alpha despite the challenging environment.
Oh, excellent. All right. So you prompted my next question. So as far as portfolio advice for investors facing Nigerian inflation, gold, oil, Seplat, that's a stock that has caught fire. So gold, oil and gas stocks, the new gold ETF, that's the portfolio advice for investors looking to finagle their way around inflation.
Okay, well, we have to actually tread on the side of caution here. Why? Because looking at the fact that oil prices are already retreating, and if Russia and Ukraine comes to an agreement, we could see oil prices fall further, and it could actually lead to sell-offs in oil and gas stocks. But again, right, what I've just said is that those that were exposed earlier, those that got in earlier, will be smiling to the banks now. But looking forward, it's going to be advisable to diversify between Naira assets and dollar-denominated assets like Euro bonds, also access to new gold ETF. And of course, portfolio investors are also faced with inflation. US inflation came out last week around 7.9%. And what that tells you is one of the economies that you say is safe, right, to invest is also battling with inflation. So it's a global phenomenon, and every investor is really facing the same problem now. The goal is just to be invested, as staying in cash would not be beneficial, considering the fact that cash is losing its value at this point in time.
And thank you so much for that. What about I think the Monetary Policy Committee is meeting next week. How do you think they're going to react to these numbers and other macroeconomic matters?
I think the MPC has been pro-growth for a very long time, and we expect that stance to continue. With high inflation, we'd expect probably a rate hike. But what we've seen in the Nigerian scenario is that if inflation does not really respond to rate hikes, except it is to attract portfolio investments, right? And those portfolio investors are concerned about our exchange rates, especially the fact that there's a wide gap between the official and the parallel market, and that connotes a weakness in the naira. So you would want to bring in your currency when there's a market clearing exchange rate, and that would actually boost foreign portfolio investment into the Nigerian economy. So I think that's what investors will be looking at across the world. Whenever we have high oil prices, what we've seen over time is that Nigeria benefits, but there's a different case now because there are exchange rates disparity, as well as the huge fiscal challenges that we have. So those once the CBN can work on the issues of our exchange rates, I believe by then foreign portfolio investors will be interested. But again, politics also influences. The election comes up next year, and you won't want to see investors investing during a volatile time as this.
Ibukun Omoyeni, economist with Vetiva Capital Management Ltd. Thank you so much for taking the time to talk us through the latest inflation numbers in Africa's largest economy. Thanks so much, Ibukun.